crude oil futures, it's not only an active market to trade, but it's also probably one of the most popular instruments that are available to day traders. And that makes trading crude oil a wonderful opportunity for traders to make additional income or just a standalone income producing market. And this graphic is a recent snapshot of the daily volume. And you can see that volume often exceeds 1.5 million contracts traded per day. So it's a liquid market, and getting in and out of your trading position should never pose an issue, which is vital for day traders. If you're stuck in a position or you're suffering from extreme slippage, that can have a tremendous impact on your overall trading profits. So in a moment, I'm going to show you a real inventory release trading session that was covered in our live trading room. But let's just cover some basics first here. These are the crude oil contract specs. Probably one of the most important things is the contract units is 1,000 barrels and the minimum price fluctuation, which is a cent per barrel. And our favorite crude oil trade, and every trader has a favorite time to trade, and in Netpicks, trading crude oil 2 minutes after the weekly inventory release is ours. The weekly inventory numbers, they're released on Wednesdays at 10:30 in the morning, New York time. And this is an extremely volatile time to trade, as the numbers represent the change in the number of barrels of crude oil that is held in reserve by commercial firms. So why is this important? Crude oil is a driver of price of many items, given it's still the #1 energy source in the world. When the supply of crude oil goes down over the long term, we can expect the price of crude to increase, which will increase the cost of virtually everything that we buy. So if we see a higher supply of crude oil and demand is not keeping pace, the price is going to go down. And we see the price of crude oil, it impacts inflation rates, the price difference between the US dollar and Canadian dollar, and impacts the growth of the economy. Trading crude oil on these days after the release can enable you to keep your day trading short and in profit, as opposed to these lengthy day trading sessions that some traders just love to do. And our coach, TJ, he recorded a crude oil inventory trading session, and I want to go through some very important aspects of that trading day. So pay attention, Bill, because this is a quick 1-minute trade that enabled all traders that took that trade to walk away from their trading screens for the rest of the day. So the first rule is we stand aside for 2 minutes following the inventory release. So what you see here is the immediate effect on price the release can have. This is a strong thrust in price with obvious highs and lows put in after the inventory release. And while you're probably thinking that was a quick path to profit, the fact is that you would probably had a very difficult time being able to trade this unless you were long the market before the release. So this is why the inventory release trading plan, it has our traders sitting aside for 2 minutes following the release. Getting caught wrong-footed in this market during this time can have devastating effects on your trading account. The second rule is getting in sync with the printed trade. So this rule means that whatever setup is printed on the chart before our 2-minute hold time is up, we will try to get the entry price and take part in that trade. Using the counterpunch trading system, you can see the dots on the charts, and these represent the entry price, dynamic and multiple exit prices, stop loss price, even trailing stop prices. And the setup with the yellow arrow was the newest setup that occurred after the release, and it's the one that traders would take. And you must be quick to enter your price into your broker platform, but that is the nature of trading such a volatile time in the crude oil market. Getting in sync is all about not missing a winning trade when the setup that prints during the release is still active. Because the setup is still active, this means that the trading conditions are still on point for that setup. And it would be foolish to not get involved in a trade that could potentially be a huge winner, especially if you're able to trail your stop for the bigger gains. And the third rule is we follow the targets that are printed on the chart. One of the best things about trading where your targets are printed on the chart is that there is zero guesswork. It's simply if you're at this level, you do this, and you know in advance what those price levels are. These price targets are dynamic, which means in a wide-ranging market, your profits will be further out to take full advantage of that bigger price move. In a slower moving market that are trading tight, your profits and your stops will be closer to the entry price to avoid sitting through drawdown as you wait for bigger moves that may never come. And many traders have said that seeing the prints right on the chart, it helps keep their emotions in check. They don't hold past the dynamic targets unless they're trailing in hopes of that home run trade. They no longer jump into a trade because price action looks good, but they wait for the trading strategy to invite them in. Their stop loss is the line in the sand, and taking their stop, even the trailing stop, has protected them from devastating losses. Even though trading the crude oil inventory report can be a crazy time, using a proven trading plan, a trading strategy that has helped tame that crude oil market so you can profit from it, is something that we at Netpicks, we are very, very proud of. And we want you to be a part of it. So you can take a walk through our trade room. You want to see all of this stuff live, and help you do that, we're going to offer you a free trial of our trade room where you'll see trades as simple as this one take place virtually every day in other markets as well. Down below in the comments, you'll see a link to the trade room. Just click that, sign up, and we'll see you on the inside.